Hello and welcome to another video on my YouTube channel. My name is Joris and today I'm here with a video about the best performing higher dividend yielding UCITS ETFs in Europe. And higher dividend yield here means more than 3% of dividend yield. So what did I do for this video? Well, I follow around 148 UCITS ETFs for my YouTube channel. I already reported about 136 in the meantime. So they invest towards the world, the developed countries, the USA, Europe, the emerging markets, the Swiss market, and also the real estate businesses. You can see those 136 UCITS ETFs in my previous videos in which I talk about ETFs. I do follow more UCITS ETFs, but I just haven't found the time yet to make all the videos that I want to make, so you can expect more UCITS ETFs on my YouTube channel in the future, but yeah, of those 148 UCITS ETFs that I track almost every month, I only talked about 136 UCITS ETFs so far, so even those I haven't reported all yet, so yeah, it's a bit difficult when you are working and then your hobby is making YouTube videos, but I hope you understand. And of those 148 UCITS ETF, I selected only the ones that are 5 years or older, and that were 132. So this means that UCITS ETFs that are younger than 5 years are not included. And yeah, you know LDEG, that's one of my ETFs or our ETFs that we have in our ETF portfolio. That one is younger than 5 years. It's about 3 years and a half, 4 years. XYLF is only 1 year and a half old, and JEPG almost a year, a little bit older than a year. So those I can't include in this overview. And then I selected only those with a dividend yield of 3% or higher. And this meant that only 30 remained. So that's 22.7% of the 132. And those are ranked then according to their total performance since the 31st of December of 2019. And all the performances are in euro, and also the dividend yields are in euro. That's just to have everything uniform, and yeah, so that I can compare everything better. And this means, of course, that all the UCITS ETFs, so more than 75%, are not included. Even VHYL that we have also in our ETF portfolio isn't included, but because that one just dropped below 3% with a dividend yield of 2.93%. So it used to be higher, but the price rose, and yeah, companies, they don't pay more dividends as the price rises of their stock. They just keep paying what they are paying, so you can't influence that. And when the price goes higher, your dividend yield goes down. So that happened for VHYL, and that's why it's not in the list here. So I'm going to give the 3 best ETFs that performed the best in the past 5 years and a bit. And I also want to put it into perspective, because here you can have the total performance since the 31st of December of 2019 of VHYL. So it's 48.17%, which isn't bad at all. I'm really happy with that. When you will look in the table of the 30 ETFs, you will see that it's between the 4th and the 5th position. So that's not bad at all, but yeah, the dividend yield is below 3%, so it's not included. Then you have VWRL with the performance since the 31st of December of 2019 of 65.59%, and that's the FTSE All World. So the VHYL is the FTSE All World High Yield Index. And here you can see that this ETF has a 1.25% dividend yield, compared to almost 3% for VHYL. Then you have H4ZG from MSCI World Index with a dividend yield of 1.50%, and that one had a performance of 75.69%. Then you have VUSA, the Vanguard S&P 500 ETF with a 0.80% dividend yield and a performance of 91.70%. And then you have the Nasdaq 100 ETF that rose 137.23% and has a dividend yield of only 0.25%. So if you look at this, it seems like the higher your dividend yield is, only here VWRL and H4ZG is a bit different, but okay, you can see the overall tendency for when the dividend yield is higher, that your total performance is lower. But then you have also CHDVD, which has a dividend yield of 2.97% dividend yield and a performance of 77.84. So it's in between H4ZG and VUSA. So this one is the exception in the line, and you will see later in this video that actually you can't really draw a line in in the performance and the dividend yield. Overall, yes, because you always have outliers, but if you look more in the direction of, for example, here around 3%, you will see that the performance can vary quite significantly. And you have the same with stocks. You can have stocks with a dividend yield of 5% that perform really good, and you can have stocks with a dividend yield of 5% that perform really terribly because, yeah, they are just not good companies. They are dying companies, and that's why you always should do your due diligence on all the companies and select only the companies that you think that have a future. If you don't see that, don't touch it. And it's the same for ETFs like SDIP or SDIF. I'm not a fan of that ETF. It invests in a lot of stocks that have a high yield but are also dying. So I would shy away from that ETF, and yeah, it's not in this list, but just be careful. And so stocks with a lower yield were more in favor in the past 5 to 10 years. So the past decade was in fact a really tough decade for dividend investors, but I stayed true to my investment strategy because I knew in the 90s, in the 2000s, that it brought me a lot of good returns, and I think that period will come back. But it's also to be said that when you are young, younger than 40, 50, that you shouldn't neglect the growth potential of stocks. But you should know that you take more risk then as well if you invest towards growth stocks, and this means that when the market tanks, that your stocks ETFs will go down more than the stocks and the ETFs of firms that give reasonable dividends. Like you saw, in fact, in the past month, all the dividend ETFs performed quite okay. So our portfolio is a little bit up compared to last month. And in the meantime, I'm raking in the dividends as well, so that's really nice. And a lot of other people that only invest in the EQQQ or the QQQ, they lost a lot of money in the past month. And if you only have the accumulative version, you don't see dividends come in, and that's really difficult. So you should always be aware of that, and also be aware of the tax implications of the strategy that you chose. So when you go for more growth companies, you know that your portfolio is going to fluctuate more, And when it fluctuates more, you should be able to withstand the downturns and just hold off on selling. But then later on, when you have a lot of profit and you want to sell your ETF shares, and you have to pay a tax on the profit that you made on your ETFs, then you know that there are, you have to pay a lot of money in that year. And if you want to switch to another strategy, so a dividend strategy later down your life, just be aware that you have tax implications there. And this can be different for a lot of countries. So do your homework and be sure to pick the right one. So let's go into the first ETF, and that's TDIV. Actually, one of the best ETFs, dividend ETFs that there are. Just it's a Dutch ETF. So you always have, in other countries, you have the 15% withholding tax, and sometimes you can reclaim that 15% and sometimes you can't. So check that also in your country. But the total expense ratio is only 0.38%. So for a dividend ETF, that's pretty reasonable. You can buy one share on the SIX stock exchange for 41.85 Swiss francs. The dividend is paid out in euros on the SIX stock exchange. It contains 100 holdings and there is 1.6 billion invested into this ETF. It's a fully replicated type, and in the past year it is up almost 21%. The past 3 years it is up almost 51%, and the past 5 years it is up almost 153%. Since 31st of December of 2019 it is up 84.23%. So you see what the COVID period actually did to the performance of this ETF. So it's almost half, and that's just because the 3 months are included in this period that aren't included in this period. So just be aware that downturns can influence the overall performance of a ETF quite significantly. And you shouldn't be worried, because here you see that's not a bad performance at all. So if you keep buying in an ETF, you will also buy it at the end of February of 2020, and then you bought at a really good time, and now you see a quite big return from that buy. So just do continuous cost averaging and you will be fine when you don't panic and you don't sell when the market is down big time. It pays out quarterly in March, June, September and December, and the dividend yield is 3.51%. And here you can see the dividend payments. Once again, June you have a higher payout, because then also a lot of European companies are paying out their dividends in March, April and May. So that's why this number is always higher for the ETFs that include European companies. Then you have EMVEUA from UBS, and it's an MSCI European Money Unit Union Value UCITS ETF, and you will see value returning in the next ETF as well. Total expense ratio of only 0.25%. It's a Luxembourg ETF, this one. You can buy one share on the SIX stock exchange for 49.93 euros. The dividend is paid out in euros. There are 142 holdings into this ETF, and there is 165 million invested into this one. Fully replicated type as well, and in the past year it is up 22.70%. The past 3 years it is up 55.50%. The past 5 years it is up 141.68%. So actually the past 3 years it performed better than TDIV, but over the last 5 years, this one is up quite good, but TDIV just outperformed it. And the total since the 31st of December of 2019 is almost 60%. It pays out half yearly in February and August, and the dividend yield is 3.78%. And it pays out 0.3696 in February. So in 2023, they didn't pay out a dividend in February. So that was an exception there. But they picked it up since 2024. And on the 7th of August of 2024, you got a payment of 1.5467 euros. And then you have IEDL, so that's not one that notes on the 6. It's the iShares Edge MSCI Europe Value Factor UCITS ETF. So once again, a value there. And the total expense ratio is 0.25% as well. You can buy one share for 6.54 euros on the London Stock Exchange, and the dividend is being paid out in euro as well. You have 150 holdings in this one, and there is only 39 million invested into this one. The previous time that I talked about this ETF, it's more or less 6 months ago, there was just the same amount invested into this ETF, and that's something that I don't understand, because this one is a really good ETF, a dividend ETF, and people are just neglecting it because there is little money invested into it, and then they can just they can stop this ETF, and that would be a shame, because this one really is following an interesting index. It's a sampling ETF, and the past year it is up 21%. The past 3 years it is up almost 43%, and the past 5 years it is up almost 137%. Here my date is wrong here. It should be 31st of December of 2019, but that's the inception date. So you see that it's only 6 years and a bit old, 7 years and a bit old, and that's 57.44% up since the 31st of December of 2019. It pays out half yearly in June and December, and the dividend yield is 3.75%. So here you can see the payouts. So once again, June higher than in December, like a lot of European ETFs do. And here you can see that TDIV is actually from another planet. So VanEck Morningstar Developed Markets Dividend Leader UCITS ETF. That one is up 84.23%. It's here, and yeah, there is a quite big gap between number 1 and then 2 and 3. So the second one is the one from UBS, the value one, and the third one here is the iShares at MSCI Europe Value Factor UCITS ETF. So they are quite close together. Then closely followed by the Franklin European Quality Dividend UCITS ETF, and you all know that one. That's the FLXD, the one that my wife and I buy as well for our dividend portfolio. And yeah, the one here totally at the bottom is the iShares Stocks Global Select Dividend 100 UCITS ETF. It's the ISPA or the SDGPEX that my wife and I also buy, so that's number 8 in the list. I already mentioned that VHYL would be between number 4 and 5 of this list, but yeah, it's just below 3%, so it's not in the list. And yeah, these are the first 8, and it goes from plus 84.23% up to plus 32.67%. And yeah, TDIV is just exceptionally good. That's all I can say about this slide. And here you have all 30 ETFs listed, and it goes 1, 2, 3 like this. Also EEDL, it's not on the 6. XD3E is not on the 6. UKRE is not on the 6. And here this is real estate. So more or less you can say the real estate are here. The exception is the United States property, that is up 15.22%. All the other real estate company ETFs are actually quite down. Here, this is the preferred stock USA ETF, which is only up 0.90% in the past 5 years. And you also have here the fallen angels. So that one really picked it up the past period, because that one was pretty negative. I think about 1 year back, and now it came back up to 19.63%. And yeah, TDIV 84.23%. Nobody can complain when they have TDIV. The only bad thing is, of course, the withholding tax when you are not living in the Netherlands, but I already talked about that. And you can freeze the video here and write all the tickers down, and then you can look them up on Just ETF. And just note that the dividend yield and the total performance here on this slide is always for the situation on the 14th of March of 2025, and it's all given in euros. So the currency in euros. And then back to the trend line. So I already talked about that the higher the dividend yield is, it seems that that also lowers the overall performance. CHDVD was a bit of an exception, but look at this one. So here we have the distribution of the 30 companies with the dividend yield on this axis and the total performance since the 31st of December of 2019 on the y-axis. And here you can see that when you are between 3 and 3.5, the performance, yeah, it's around 20%. When you are around 4%, it can go from 60 up to minus 20. So you have a huge difference in the ETFs. And overall, you can see the trend line, it's going down. So when people say that the higher the dividend yield, the more careful you need to be, that is true. So also for stocks and for ETFs, it is true. But when you take away just the 4 outliers, you'd see that here the trend line is actually pretty flat. So when you do your homework, you can always find ETFs that are actually, even when they have a higher dividend yield, they are still performing market conform. So just do your homework right. And with that being said, thank you for watching to this video. Please hit that subscribe button, it helps out my YouTube channel enormously. Also hitting that like button helps out my YouTube channel, of course. I'm just a small fish on YouTube. It's my hobby. But yeah, I hope that more and more people find my YouTube channel. And when you hit that subscribe button and hit that like button, that always helps enormously. So thank you for doing that. And with that being said, thank you for watching and see you on the next one. Bye.